Hey everyone, welcome to another episode of Trading Bitcoin with your host Tone Vays. Sorry about the little mix-up this morning. Didn't realize I was live. I was still working on stuff, and try to give you this video. I know it's 3 o'clock in the morning in New York and midnight in California, so probably the worst time to do a video for numbers. But hey, let's go ahead and get to it and looking at the charts. Well, in case you guys are wondering, well, like what is taking up all of my time over the last 2 days, I think I've spent already at least 10 plus hours over the last few days. And you can see how many tabs I have open, trying to, set up like safaris and other experiences while I'm in Kenya and Rwanda. A gorilla tracking license is unreasonably expensive, and I'm kind of trying to do it last minute. So it's just a lot of back and forth with people in Kenya and Rwanda, and it's a nightmare. I mean, this is something you do like 6 months away, not the morning of the biggest crashes in the markets. But hey, this is what I'm doing so that I can actually start trading next year while I'm traveling. I'm not just gonna sit in a hotel room. So let's go and look at the charts. Where are the charts? Here we go. So it looks like the circuit breaker got hit and the S&P 500 was halted. The futures of the S&P 500 were halted on overnight trading. This is actually significant. I can't, I don't even remember if there was a halting of trading in the 2008 crisis. I was trading during that time, but I just, it was 10 years ago. So I don't really remember. It was over 10 years ago, 12 years ago. I don't remember if the circuit breakers got hit. I don't really care to Google it. But if you look at the S&P 500 chart, it is not trading. It is stuck at 28.19. I don't know how long it's going to be halted trading. It is 3 in the morning now. I mean, it's morning here in South Africa. We will see what happens. This is certainly not a good sign. If you looked at my Twitter yesterday, if you look at my Twitter last night before I went to bed here in Cape Town, I tweeted out like my views on the top 4, which is Bitcoin, S&P, oil, and gold. And let's look at the S&P. This is the S&P yearly. The S&P yearly is on a 9 setup. Now I've covered this in the past. I've covered the yearly 9 setup. Now going into the year, obviously the 9 was pointed out to me. And while you are supposed to pay attention to one of these 9s, notice how as I go back historically, like here's a 9 that was totally ignored. Here's a 9 that was totally ignored. Here's a 913 that wasn't totally ignored, but wasn't exactly an immediate correction. I mean, the following year was still an up year. That was 1968. If you go back, the prior 9 was the 1958 year, and that one was also completely ignored. Now, this sequential 13 seems to be useful, and this sequential 13 was a down year, but it was a down year within, like a 20-year consolidation. This combo 13 didn't do anything. This combo 13 didn't do anything. This combo 13 didn't do anything. There was also a sequential and an aggressive. So all 3 13s came on the same year, and it didn't do anything. And then we topped, a year and like a year and a month later, because that was January. So to me, what this says is that the sequential on a yearly S&P scale is not all that useful. So going into this 9, I wasn't exactly anticipating a big correction, because historically sequential has not been good on this time frame or this asset. Like it didn't give you any good trades. And while I would have paid attention, and I did pay attention to this 9 coming in on a yearly S&P, yeah, it wasn't exactly something I was that was going to be a giant factor in my trading. It's also a yearly chart. Now the 6-month chart on the S&P is very different. Now the 6-month chart on the S&P gave you a perfect 9 top in the '08 financial crisis and a perfect top in the dot-com bubble. It also gave you a really good, indication that things are ready to slow down for a 1 to 4 candle correction. And you can see how after the most recent 9 on a 6-month scale in starting July 2014, the following 3 candles all gave you, well, not the next candle was a doji candle, but the following 2 candles gave you lower lows. So the market did go down. Excuse me, guys. Had to sneeze. Man, if I do that at the airport, I may never get out. Gotta be careful. Now the 6-month chart gave you a crazy 9 combo 13, a year ago, and this was not a reversal candle by any means. And you can see that the following 6-month period had a new all-time high and a new high close, and then the current 6-month period gave you a new all-time high. So the 6-month chart technically called for 6 more periods of upside, like 9 more periods of upside. And that's why the 6-month chart, I do like it better than, I don't know how it was like prior historically, but I was trying to pay attention to the 6-month chart with sequential, and it's still not telling you that a big panic like this is in the works. Like they did a much better job here and here. So we will see. So people asked me for the bigger picture sequential stuff on the S&P. So here it is. Here's the monthly S&P with sequential. And you can see we had a price flip on a monthly scale. And I mean, the markets are, we got to look at the open, right? The open could be all the way down here. So I may or may not bring you a video late tonight from here in South Africa when the markets open. I think I'm going to want to do that. I think markets open the 6-hour difference. Market opens at 9:30, so it's about 7 p.m. I don't know if I'll be home or not. Like I have like shit to do. It's my last day here in Cape Town, and there's people I still have to meet. So that's what I'm doing, and I still got to deal with all of those Kenyan safaris. So we'll see. I'm gonna try to bring you another video when the market's open. I'll do my best. So the S&P is really interesting to me. The other interesting thing to me is the dynamic between the gold, S&P, and Bitcoin. So gold has completely decoupled from Bitcoin. I mean, gold's been going up. This is the yearly chart of gold, but that's a little too far out. Let's just finish the S&P real quick. The monthly chart, it just still looks bearish. You have support here, but it's the weekly chart that I really pay attention to, and that's the one I tweeted out. And at this point, there's absolutely no support in the S&P 500 until the 200-week moving average, which currently sits at 2,642 points. So 2640, there you go. 2640 is where I'm now looking for the big pullback. Gold, here's gold on a yearly scale. You can see how it's a green 4 of 3. So we have 2 amazing years in gold, and this year is just getting started. You can see how right now the yearly chart has you at a brand new all-time close. That is very significant. Well, it had you at a new all-time close a couple of days ago. And that's very good. I mean, the close here was 1675, and right now we're at 1669. So this is very, very bullish for gold. I am now a big gold bull, and I would love to get out on a new swing high and convert that into Bitcoin. Let's go to the monthly chart of gold. And the monthly chart of gold is very clean on a green 3, above a green 2, and above a green 1. This was all very good. So the current breakout, and I did mention this breakout, whether it was on a weekly chart or a daily chart, I talked about it the other day, that I was bullish. I was bullish on this green 3 candle following the potential take profit on this 9 weekly candle of January 27th. And then you had I never trade green 1s that follow green 9s. I then need a green 2 to go above a green 1 to go above the 9. Going above the bodies is fine. That didn't happen. But then right here in the beginning of this candle right here on this 3, that's when bullishness started. This was a horrible week that would have taken me out of the market, and because I don't like this kind of volatility. I like my markets to be, I like predictable trades. I would have taken my profit. I would have gotten out. I probably would not have gotten in. And this is a tricky candle to get in on. So, but overall, you know, if I'm sitting on gold coins, I'm going to keep sitting on those gold coins because I think gold has a very high probability of going to a new all-time high. All right, let's take a look at Bitcoin now. Now that we have 550 viewers here. Here's the, let's go to the weekly chart. The weekly chart is very telling. The weekly chart, let me bring back my annotations. The weekly chart activated the short trade yesterday. This is according to the rules of sequential, and I like to trade the sequential. So the rules of sequential are very simple. A red 2 going below a red 1. Ideally, you want this happening like after a 9, but we never got to a 9. We're only on a 7. We hit very critical resistance points. Was I bullish right here at the top? Sure. I'm always bullish when things are moving up, and I'm always bearish when things are moving down. I mean, that's how you make money on the fat part of the trade. Now, I try to pick my tops and bottoms based on my favorite way to do so, which is candlestick patterns and sequential. But I didn't get either of those. This is not really a doji candle or a shooting star candle, nor a sequential 9. This was a way for me to pick a bottom. This was a 9 buy opportunity. This was a way for me to pick a top, a doji plus a 9 sequential at the top. But over here at this top, I don't have anything. I have resistance, but resistance alone is not enough. And also I adjusted this resistance after the fact. Prior to me adjusting it, we actually broke this resistance according to my chart. Everyone's different. Everyone charts differently. And that's not a problem at all. So for the same reason, I become a bull right here on a weekly scale with a green 4 going above a green 3. For the same reason, I become a bear right here with a red 2 going below red 1. Now, this does not mean this is where I buy and this is where I sell for a losing trade. If you think that's what I just said, you should never ever trade again, okay? This was a pretty big up move from this line. I mean, that's a 20% upswing. If you are holding through a 20% upswing and then losing money on this trade for a probably 18% downswing, you will never make money in the market, ever. That's actually exactly, nope, a little less, right? Do you see how I needed it to go up 20, but it only fell 19? It actually fell less in percentage terms. And if you held through it, you lost 3.6%. This is why losses are a lot more dangerous to your portfolios, and you need extra gains to make up for those. So Bitcoin has bounced a little bit. Wow, look at that. Look at that strength. Must have happened this morning because when I woke up, it was literally like 7,600 when I woke up about an hour and a half or 2 hours ago. So let's go to the daily chart and see what's going on. The weekly scale certainly has you in a bearish trade. So the daily chart, this was yesterday's close. Yesterday's close was really bad. Yesterday's daily close, you fell below the 200-day moving average. You fell below the 128-day moving average, and they're all now declining. Now, the only thing that you still have going for you is that the short-term moving average of the 50 is still above the other two. But if this thing continues to go down towards 7, this thing is going to cross it to the downside fairly early. So the sequential did an amazing job calling the swing top right here at 10,500. I'm sure I would have pointed it out. Go back to I do videos almost every day, so go check that out on that. Now, I'm sure everyone's talking about head and shoulders. There will be a couple of ways to draw this. Like, I don't really care for head and shoulders. I never cared for head and shoulders, but multiple ways to draw it. There's some subjectivity. I mean, there's no subjectivity in the sequential. The number either is or isn't. right? The number is either a red or a green. The number is either a 1 or a 2. There's no subjectivity here. But you can draw your, it's going to be hard. Well, it's not hard to draw it, but I mean, you can draw your neckline like this, a little bit slanted. You know, this is your left shoulder. This whole thing is your head. This is your right shoulder. You can also draw it this way if you like. It doesn't matter. There's a lot of subjectivity. You know, this is the left shoulder. That's the head. And that's the right shoulder. You know, there's a lot of subjectivity. You can draw it this way if you like. It doesn't matter. You know, I'm sure someone has drawn it like this. There's your neckline right there. You have left shoulder, head, right shoulder. It's really up to you, however you want to draw it. No matter how you drew your head and shoulders, you could look like a genius because, you know, it's falling down. If you look at the, I guess, the most aggressive head and shoulders, which is your biggest form, probably the one that makes the most sense, which is this one, like right here. And then you measure your distance. That is a 25% upswing. So a 25% downswing. Where does it take you? It takes you right to new lows. It takes you into new lows. So there you go. There's your head and shoulders target. 25% takes you down to 6,200. That would be a new swing low on 6,200. Okay. I don't see any real support at 6,200. I do, however, see support maybe at this, whatever that line is. What is that line? So that line is the daily support line from the lows. And if I extend this line backwards, probably hits this point here. Maybe. I don't know. I'm not going to do it. So yeah, so I was looking for this to be the secondary low. Obviously, the time has passed. So if we go down at this point, we can have a higher secondary low, which also makes sense because over here, the 200-week moving average is rising quickly. And you do have double support at 5,600. So 5,600 seems like a reasonable target. Crypto Man Ran and I keep trolling each other on Twitter. Here's my Twitter. Let's go to tweets and replies. Here's Crypto Man Ran. Ran Nooner from Crypto Trader South Africa, where I am right now. But he's not around for us to hang out. So Vays is the only Bitcoin maximalist. I don't like to be called Bitcoin maximalist. I'm a shitcoin minimalist. That's what I call myself. I have a hat. We're going to be selling those hats. Shitcoin minimalist. It just makes a lot more sense. Like, I don't know what a Bitcoin maximalist is. Like Vitalik's a maximalist. Justin Sun's a maximalist. Larimer's a maximalist. I mean, they want the maximum number of shitcoins. I'm a shitcoin minimalist. Like, it's Vitalik making up words that make no sense, which is what he's been doing his whole career. So Tone's the only shitcoin minimalist that is never bullish on the price of Bitcoin. Well, that's not exactly true, right? I mean, I was bullish on the price of Bitcoin all throughout 2016 and 2017. So I was bullish from like here, from early 2016. I mean, my stuff is out there, right? So from early 2016 all the way until like even a few days past the bubble, I was very bullish, right? So I spent 2 years being bullish, and now I spent 2 years being bearish. But here's the real part, right? I went bearish like here somewhere. I went bearish around here. I went bearish at like right after this turned. So since I've been bearish, I mean, I'm not even gonna, like this morning, what is that? Price of Bitcoin is down over 50% since I went bearish, right? And we're down way more than that from the top. So I don't understand what the problem is. Like my brain just doesn't comprehend the problem. Bitcoin is down 60% from the high, and somehow being bearish is wrong when you're still down 60%. Like I don't understand. Like I just don't understand the logic. I don't get it. But he'll probably win our bet because it's for a nice steak dinner, and in order for me to win the bet, we need to fall below 4,500, and we only have 2 more months to do it. Is it possible? Look, anything's possible, but this is unlikely. Falling down to 5,000, 5,500 probably, yeah, it's more likely. More likely than 4,500 for obvious reasons. I'm bullish when the chart tells me to be bullish. If the chart doesn't tell me to be bullish, then I'm not going to be bullish. There were periods in here where the chart was bullish, but that's about it. I was also bullish, you know, in here a few weeks ago. So I'm not bullish for very long. When I go bullish, I'm usually bullish for like 2 weeks, and then the market and goes down 50%. So I've been bearish 90% of the time for the last 2 years, and like rightfully so. I mean, I wouldn't change anything. Rightfully so. You're in a bearish market if you're in a bearish market if your memory is more than 6 months. This is still bearish to me. Looking for one more low. Still down 60% from the high. All right, lower level time frame, daily. I really want to see the BitMax funding rates. So the BitMax funding rate is finally favoring the bulls. Finally, there it is. Finally. This is probably one of the better indicators that tells you when shit's overbought and shit's oversold. This one is still telling you it's favoring the bears. They're both a little bit. They're supposed to be the same. Oh, no, it's still favoring the bulls. This is, oh, there's backwardation now. Okay. Oh, yeah, the BitMax funding rate is still favoring the bears. People are still over bullish. People are still bullish. Amazing. All right, so here's my daily chart. We crossed the prior swing low line. We crossed 8,500 and down we went for 1,000 points. That makes total sense. Makes total sense to me. That's bad. I'm going to delete this line. I don't really need it. And sequential, where is it? Where are my numbers? Why is it not displaying? There it is. Sequential is only on a red 2. It's only a red 2. So there could be plenty of downside left. Let's look at the lower level time frames. 12-hour chart still has plenty of downside. 4-hour chart. 4-hour chart gave you a 9 not that long ago. We then had a, why doesn't this, oh yeah, this was a red 1, and then we had a red 2 go below the red 1 and below the 9. So right here is where the short trade gets reactivated. And that short trade on a 4-hour scale took you down another 360 bucks. So is there anything in this chart that's making me bullish right now? Other than the shape of the candle, not really. So obviously I would have a break-even stop loss here. And if we go a green 1 next candle, and then I would need a green 2 above a green 1. So we're a little short-term oversold, I'm sure, on all the metrics. I'm not really in a rush to go into a bullish trade here. I'd wait, but like the environment's crazy. I would wait for the stock market to open. I can't wait for GBTC to open. It'd be nice to see what the premium looks like. We'll wait. The CME futures. I mean, I don't see the data yet, so. Bitcoin dominance, I think the shitcoins will fall faster than Bitcoin, so the shitcoin dominance should start to rise again. Hash rate, well, if Bitcoin falls another 2,000 or 3,000, the hash rate's certainly going to take a hit. That's obvious. This is the chart that I'm expecting to touch the yellow line one more time. This either means we have to fall to 6,000 before the halving. Sorry, 3,000 before the halving, or 6,000 after the halving. 6,000 after the halving seems more likely. Shitcoins for the since the beginning of 2019. So this is how dumb the crypto space is. The BSV, which is a clone, which is a fake Bitcoin of a fake Bitcoin, is outperforming actual Bitcoin since January 2019. That is just insane. That's insane. That's how many people believe in Craig Wright. That's how dumb some of the people are in the crypto space. Now, the only other top 10 shitcoin that's outperforming Bitcoin is the Binance security scam token, and we'll see how long that lasts. Yeah, so for fundamental reasons, like why is gold doing well and why is Bitcoin getting crushed? Well, to me, it's obvious why gold is doing well and Bitcoin is getting crushed, because the S&P is getting crushed and Bitcoin is not considered a safe haven asset like gold. So they could correlate together because they're very, very similar. But when you're, when fear is taken over, you're not going to see Bitcoin as a safe haven because this is not a financial crisis fear, though it could lead into it. So what's happening is Bitcoin is still very speculative. And if people don't want to speculate on Bitcoin if their job is in danger, but governments around the world fearing this stuff could actually take gold more and more seriously. So it makes sense why gold is still rising in this. But if the economy really collapses, gold will also fall the way it did in the 2008 financial crisis. But my opinion on gold doesn't matter. It's about the chart. And the chart on gold is bullish. So I am happy that gold is rising because I was a gold bug before I discovered Bitcoin. So I still have, gold coins and stuff that I'm dying to sell, but I don't want to sell them below 3,000. I want at least, 100% gain on my gold. So I'm going to be waiting unless I see something. Unless I see another major top in gold, I will go and I'll convert those gold coins probably into Bitcoin or S&P. I don't mind buying the S&P dip. It is too early for Bitcoin to be a safe haven. I mean, I would say, well, look, you can see it by the Bitcoin dominance chart, right? So if you just go to the Bitcoin dominance chart, Bitcoin dominance is at 65%. That means that within the crypto space, 35% of the people are too stupid to understand Bitcoin. So if within the crypto space, 35% of the people are too stupid to understand Bitcoin, like how do you expect like not people in the non-crypto space to really understand Bitcoin? Silver is really irrelevant, guys. Silver is the shitcoin. Like silver is the equivalent of, let's say, Ethereum, right? Because it's good. Well, no, silver is way more useful than Ethereum. Let me not talk that bad about silver. Look, silver is, unless you are a manufacturer that needs silver, silver is just a toy you trade with to make more money. Silver is not a safe haven asset by any way, shape, or form anymore. Not in the world of modern banking. Gold is. The gold to silver ratio, load chart layout, gold. I have a gold silver ratio. I have two gold silver ratios. Let's pull them both up. I don't remember which one was which. Yeah, so at the moment, I haven't had time to like pay for TradingView and stuff and set it up. So I don't think I can open my charts. It should be opening if I may have to restart my computer. I don't know. I can't pull them up. Anyway, the gold silver ratio went to 100 to 1. And I think it's going to go to 200 to 1 and then maybe one day 1,000 to 1. Like whatever it is, like silver does not have any monetary property anymore. There's no monetary, like if you are buying silver for its money properties, you will learn real quick. It's like if you are buying Ethereum for its sound money and financial property, you will learn real quick that that property doesn't exist. So silver has lost all monetary property in the world of modern banking. And that's why the ratio of gold to silver went to 100. And I think it's going to break it in the near future. Let's talk about oil. I am very bearish on oil. I've been bearish on oil for a long time now. I know Leah and I debated this back in the day along with Tyler. I mean, I thought it was a little weird. I mean, look, you had a nice trading opportunity right here. Here's a monthly 9 right at the lows in oil, and it topped pretty much near the 9 over here. That's the monthly scale on oil. Here's the weekly scale on oil, huge gap down. Look, the advancements in technology is going to make oil obsolete, okay? In addition to that, there's plenty of oil out there. Like, I can't believe I actually read this book. It was The Oil Factor. The Oil Factor, that was Stephen Lieb's book. He had 2 books. There was The Oil Factor. Was that a movie of some kind? And then there was another one, like when oil hits. Oh, there was a movie. Okay. When oil hits $200 a barrel. There it is. There was a book. Stephen Lieb book. I have no idea how to spell his name. There we go. The Coming Oil Collapse. Yeah, this book. I have it at home. I have this book at home. That was the second book. Read parts of the first book. That was the second book. And what, wrong for 15 years? Not just wrong for 15 years, right? Like it's 15 years later since this book came out. Oil is now $200. It's almost 20, right? Like how wrong can you be? And on top of that, add 15 years of inflation, right? So like this is insane. And these are the people that, you know, the gloom and doomers that don't seem to understand anything. And it's insane. And I can't believe I used to buy into this nonsense. I can't believe I used to buy into this nonsense, right? This is why now I look at the charts and I trust the charts. I mean, I knew charts back then, but like I actually believed in this insanity. Like my favorite article, where is it? It was in People Magazine. People Magazine. Doug Casey. Gold to 5,000. We're like just Googling here, right? Like I remember a lot of these things. Boom. One of my favorite gloom and doom articles of all time. Of all time. Written May 1981. May 19, this is a classic. Classic article, May 1981. Let's see, where's Doug Casey's part? Boom, right there. Okay. Bestseller book here. By 1983, the US will enter a depression that will make the crash of 1929 look like a technical error. Mounting inflation will lead to bank failures, the collapse of Social Security and pension funds, a return to bartering, urban riots, possibly even nuclear holocaust, and germ warfare among industrial nations. Now, look, this was written in 1983, right? So technically, you might have been right. You know, like Chernobyl happened, and we may be dealing with germ warfare right now with the coronavirus. Nuclear holocaust didn't happen. Urban riots, you know, we've had those around the world. Return to bartering. Well, the shitcoiners want you to return to bartering. If they think there'll be a token for every single thing and everyone has their own currency, that's a return to bartering. So maybe these things are happening. He expected this by 1983, but what are his suggestions? Good news amid the gloom and opportunities to get rich. Urges speculators to buy into companies that have fallen out of public favor. Utilities, yeah. He recommends buying real estate in Zimbabwe. That worked out real nicely for you. Collectibles like stamps, rare coins, and custom-made knives. And he is absolutely certain that gold will jump to $2,000 during the next 2 years. So by 1983, gold was supposed to be $2,000. By 1983, we are approaching 40 years later, and we still haven't seen a $2,000 oil price. That's 40 years of inflation in the dollar, and we still haven't seen a $2,000 oil price, right? So you got to be careful with these gloom and doomers. You know how much money the S&P 500 has made in that time? Think about that. Okay, that's it. That's it for me. I gotta get back to doing some work. There's really not much else to say. Now, this whole coronavirus is problematic, and I'm hearing reports out of New York, out of the US. US clearly didn't prepare itself. By the way, I don't normally retweet. Oh yeah, by the way, also check out my article. Like everything I said in the beginning of the year about my outlook for Bitcoin, I mean, I'm still standing by that. Like, nothing's really changed. I don't normally retweet anything. I usually like to be original with my tweets, but I had to retweet this. I mean, the Democrats are just a plague on the U.S. political system. There's no other way to put it, because, like, just read this thread. Like, the Trump administration tried to, prevent a corona outbreak in the U.S. in early February by being very cautious with who's entering the country, and they got criticized for it by the Democrats. And now the Democrats are demonizing the Trump administration for not taking precautions to prevent the coronavirus outbreak. So this is like as hypocritical as it possibly gets. So read this thread. It's insane. All right. As far as the conferences are concerned, so this, due to forces outside of my control or our control, we may have to move this because no one's going to want to travel. And we are like I've been chatting with, some doctors, and like the airports might be shut down. Well, like I don't know what's gonna happen. Like I may be stuck in Africa for like the next 5 months for all I know. It's probably safer here. I mean, there's no corona around here really. I'll hang out in the safaris. So this may have to be moved. We'll know for sure this week. And as far as the financial summit's concerned, as of right now, I'm still planning on being there 19 to 25. I mean, stay tuned for more news, but like I don't want to cancel this. I'm doing everything I can to keep this up, but we'll see. We'll see what happens. So we have people coming. Hopefully they'll still want to come. I mean, I'm planning on it, but this is the coronavirus is definitely an issue. Okay. We're still trying to keep this on the dates, but we'll see. Doing our best. Bali is definitely good. DR, trying to keep it good. All right. That's pretty much it for me, guys. Bitcoin is rallying a little bit. I'm still fully bearish right now across the board. I don't see anything. I mean, if it starts to go up, hit your stop loss, look for a buying opportunity, but I'll wait. I'll stay patient. And I'm going to try to buy it at the low. I mean, I expected it to be lower early in the year. We'll see what happens. We will see what happens. All right. I think that's it for me. I'm going to go back to trying to figure out what the hell I'm doing while I'm in Zimbabwe. I am going to Zimbabwe. Zimbabwe, then Kenya, and then Rwanda. And then I'm not sure yet. Depends on which countries will let me in afterwards. All right, guys. I will talk to you all on the next one. Good luck trading. Oh, don't forget Leah's book. Leah, Tyler, and Socrates. Their book's out. I got to promote that more. I got to put it on my website. I will. All right, guys. Talk to you all on the next one.